did was on, or from a sort of different styles of trading was on position trading. Now we're going to look at active trading. This is how to find those stocks you're going to hold for the next 10 minutes, couple days, more active approach. For those of you that have aspirations of making a living trading the stock market, this is the kind of trading that we do. So the active trader, as I said, is holding trades for minutes to days. We analyze the intraday time frame. And if we're a swing trader, that might be a 15-minute chart. If we're a day trader, it's probably a 2-minute chart. We still use our Stockscores market scan to find the stocks to trade. We just use different filters. And if we're a really active day trader, we are probably going to use Tradestation as well. Tradestation is software you have to subscribe to. I get specialized pricing for my students, but it's well worth it. You know, I pay $200 a month for something that makes me that in 5 minutes. It's really a great platform, but you don't need it unless you're going to be a full-time day trader. And in this case, we're going to apply the Stockscores active trader strategies. So I have a strategy for trading the first hour. It's called the worm. I have another day trading strategy where I watch the market the whole day. That's called the superhero. I'm working on a new strategy right now, which I'm pretty excited about. Started working on it last week. Strategy I do all day. Haven't put a name on it yet, but it'll be something that I'll teach if it's effective. I think it will be. So I'm always looking for new ways to trade the market. Now you can analyze in the evening, if you're a swing trader, a strategy called the pullback play. Looks for stocks that are in good upward trends, which run away from their trend line, come back to their trend line. We're going to do those in our evening analysis. But if you're a day trader and you're running the superheroes strategy, you're going to run your market scan an hour after the market opens and watch for the setups through the day. What I'm trying to say, though, is that there's a strategy to suit everyone's time and interest. You know, right now I'm quite busy because I'm doing a lot of traveling, so I only have time to trade the first hour of the day. So I do that worm strategy because that fits. As always, our emphasis is on risk management. If you go broke, you don't trade. You have to manage risk. If you take big losses, you will get out of the trading business very quick. So we have to be able to avoid what we call the blowout trade. You know, you could be right 10 times in a row, make $1,000 each time, and then you have a really bad one where you're not disciplined and you lose $12,000. You just lost all that work. So we always want to take small losses. And some strategies require some technology and really fast thinking. The theoretical approach to day trading is no different than what we've already talked about for position trading. The only real difference is that you have to work faster. You know, my worm strategy, a lot of my entry signals come 4 minutes after the market opens. And I'm working very quickly at that time of day. My kids aren't allowed to talk to me at that time of day. Because it's active, but it's only for 15 minutes, and then it's not so busy. So the process, learn the strategy, apply the strategy either using the market scan tool or Tradestation. Initially, you practice with the simulator, prove that you know what you're doing, and then you execute. So let's go through some examples just to really drive home how these things work. So eBay, this was one I did the week before last, Thursday, April 19th at 9:42. eBay announced earnings, by the way, so that was a stock moving because of strong earnings. My entry signal came at 9:42. 17 minutes later, I sold for a gain of $1,840. But again, more importantly, my reward for risk was 3 to 1. So what was I risking? 600, yeah. Because I made 3 times my risk. So if I was risking 600 and I made 1,800, that's how we get that number, right? Okay, so in 17 minutes I made 1,840, and there was my entry signal. This was on a worm trade. So I had my entry signal right there. And I sold it here. I should have bought it back again for the next leg up. I didn't. It was a day when I was quite busy, so I wasn't able to trade long that day. If I continued to hold it, it would have made even more, but I don't care. There's always another bus. Think about the stock market. It gives you trades, opportunities every day. And so I I mean, I want to maximize my profit, but if I get a sell signal, I just get out of it, move on to the next. Okay, let's go look at another one here. I'm just going to go basically through the 3 trades I did on April 19th. Again, this one was an entry at 9:32, exit at 9:49. Again, a 17-minute hold period. This time, my gain was 989.60. What was my risk tolerance? About 500, okay? I got a 2-for-1 reward for risk ratio. I made about 1,000. So if it's 1,000 divided by 2, that was a $500 risk. I took less risk because I didn't have as much confidence in that particular setup. And there it was, buy and sell. In this case, I got out right near the high of the day, so I was pretty happy with that one. I just wish I had more. And the third trade I did that day, which was, to me, a bad trade. I exited it too early. I got a little bit nervous. I broke my rules, by the way. I've been trading for 20 years. I still break rules. Just to give some of you some confidence. Also break rules. But anyway, bought at 9:32, sold it half an hour later for a gain of $288. My reward for risk on that trade was less than 1. And the problem here was, it gave me a good entry signal. It just wasn't doing anything, and I ended up getting out. I ultimately did do something. It never really actually gave me an exit signal at the time I exited, but I was having a good day and some other stuff. So the net profit from those 3 trades that day was $3,100. It took me less than an hour to do that. Now let's go through the trading economics of a trade that I did earlier this week. I bought a company called Monster Worldwide. I think they are like an employment website or something like that. Anyway, the entry was at 885, stop loss at 873. Risk, therefore, was 12 cents per share. So if I buy 1,000 shares, my risk is, or pardon me, my position size was $8,850, and that gave me a risk of 120. But remember, with day trading, you could use 3-to-1 leverage. So to buy that almost $9,000 position only required $3,000. Now the exit came at $9.40, which was a profit of $550. The commissions were $10. This is $5 for 1,000 shares in, $5 for 1,000 shares out. So that gave me an 18% return on my capital in less than 5 hours. I'll show you the chart in a second. Now, how many people have mutual funds that didn't earn 18% last year? And here's a trade that did that in 5 hours. But it takes work. I mean, you have to sit there and watch these things. So the reward is there. The challenge is being able to differentiate from the good ones from the bad ones. Because, of course, you could get lucky on this one and have 4 losers and lose overall, right? So you have to be able to tell the difference between the two. So this was also a worm trade. Entry signal there on my worm. My stop was right at the blue line. That was the little inflection point low. Remember we talked about inflection points right at the start of the day? Inflection point low there. It tested that low, never went below it, and ultimately went for a nice move to the upside. And here we had a break in the upward trend line over there. That was our exit signal. Okay, so how do we learn the strategy? Well, the rules for that worm strategy are taught in the class that I'll be doing in May. So once you learn the rules, you then, with that particular strategy, you need to be able to use Tradestation. Tradestation allows you to do real-time analytics on 1,000 different stocks. And it also requires that you use some special indicators that I have created. So I don't use things like MACD or Stochastic because everybody uses those. I developed my own special indicators for this particular strategy. It's something called a message candle indicator, something called an on-pace volume indicator. And I had those written. It cost me a couple $1,000 to have programmers write those indicators for me. And when someone takes one of my active trader classes, those are included. So you get those so you can plug those into Tradestation. And it's how we find these things. It's our edge. Because most people don't have those tools. So the people that do have an edge, they can find these quicker than most others. As I said, Tradestation costs $249 a month. You get a $100 discount if you're one of my students. So. Now we could also use the market scan. The market scan wouldn't have found Monster Worldwide, but we can do it to apply for other strategies. So if I do market scan for the superhero, which is another day trading strategy, down here to pro scans, superheroes, run the scan. It found 92 stocks on Friday that met the criteria of that strategy. And then we would drop that list into our Disnat real-time trading platform. All of these stocks were basically trading abnormal volume. That's why they were on that list. We look here, Callaway Golf, huge abnormal volume on Friday. That's what makes it worth trading. I always focus on abnormal activity. Every strategy I do focuses on abnormal activity. Nice thing about day trading is you can trade some days, other days you don't have to. When you go to bed, you're sleeping on cash. It gives people a lot of comfort, I think. The simulator is a good way to practice because you can't cheat. You go into the Tradescore simulator, you buy and sell. It keeps your track record in there. Once you've proven your knowledge, as I said before, you then start trading with a little bit of risk and increase your risk as you are succeeding. And of course, we always execute. With day trading, it's very important to be able to do direct access. You need to be able to enter those trades very quickly. And that's where someone like Disnat really has an advantage. So let's talk a little bit about the Active Trader 3-month program. Again, you start off with the foundation class. Everyone comes to the same class, whether you're an investor or active trader. At that foundation class, we teach all of the important pieces that I need to teach you face-to-face. Once you are done the foundation class, then we start that 3-month process again, but where the investors are doing a certain assignment, the active traders are doing a different assignment. I'm teaching you the specific strategies for that type of trade. And as I said, with the active trader program, you do get my indicators included as part of the tuition. To help you succeed, Disnat is a great place because they're ideal for active traders. All the stuff we've talked about already. And that's the end of that one.